Welcome everyone to the new weekly outlook. So finally we got Stefanos back this week. Welcome back,
Great,
Stefanos.
great to be back.
So we're going to start off with the fundamental side. We'll just keep it real quick, just quick summaries. But of course, you guys have the titles of these articles. So you can go back and you can go through all the details and everything like that. And then we'll move on to the technical side with Stefanos here for GJ and gold.
Getting the charts ready myself.
Awesome. So let's start off with some geopolitical news. So of course, we know the war is still going on. And what we saw was in the last couple of weeks and even couple of, almost it's been 2 months now that the war has been going on. If anything, things are kind of getting worse, right? The attacks are still continuing. The strikes are still continuing. We saw that the NATO allies were kind of getting a little worrisome about what's going on, and they were trying to bring both parties together and try to figure out some sort of a peace deal. We know that the U.S. is kind of playing a major role in this while they're providing aid to Ukraine. And I think this is the second time that they've provided aid to Ukraine. And now we're going to get into the third one in just a little bit on the next article. But now we're starting to see that there are warnings of serious danger of nuclear war between the two as the war just continues pushing. So the sentiment so far when it comes to the markets and when it comes to safe haven currencies and commodities is that we're starting to see the strength back in the safe haven currencies and commodities and those assets compared to the risky currencies and assets in general. And what we did see, like sort of in the middle of this time period, is that the market had already priced in what's going on with the war, and it was kind of just sitting on the edge. We start to see a little bit of more strength in risk currencies and commodities as the market had already priced in all this sentiment and all these fundamentals. But as soon as the news came out about potential nuclear war, we did see, like, for example, this morning, we did see the yen and gold kind of gaining strength, right? So that's the sentiment that we're kind of sitting at the moment. As attacks continue, now we're starting to see that even the US has pledged more than $700 million in additional military financing for Ukraine and its allies. And we are going to go ahead and move on to the next article here, which takes us right into this. So we're seeing that the U.S. allies lobby to get Ukraine to G20 summit alongside Putin to see if there's going to be any sort of, again, a peace deal coming to like some sort of common ground and kind of trying to back off of this sentiment that's being put out so far of a potential nuclear war. Anything and everything that we can do to kind of avoid this nuclear war. So right now, when you're looking at market sentiment and financial markets, you will see that a lot of safe haven currencies and commodities are gaining strength. There is now, we went from market uncertainty into market fear. So you guys have these articles that you guys can go back and kind of look into with more details and stuff. But this is pretty much the summary for both of these articles and the market sentiment that you guys should be watching out for. And then we also,
last time they met, I'm sorry to cut you off.
No, go ahead.
Do you remember the last time that they met between Ukraine and Russia?
It was a couple of weeks ago. I believe it was about 2 or 3 weeks ago. Yeah.
The way I look at it is like if they're meeting and they're still meeting and they're talking, that's a good sign. No matter how like crazy the talks get, I feel like it's still a good sign. Much better than both sides not being when you're not talking, when both sides aren't talking, it's just festering up. But as long as they're sitting down and talking, I think that's a good sign.
So that's one part that kind of brings in any sort of like calmness. I wouldn't say optimism, but I would just say calmness that the two parties are coming together. But at the end of the day, there's like no resolution to it. And even when the talks were going on last time, like 2-3 weeks ago, there were still continued attacks and strikes from Russia into Ukraine. So it was really like there was no point of those talks. But let's see if this time they can come to some sort of a middle ground and kind of avoid this nuclear war. But yeah, so now continuing on to the next thing with China's lockdown. So we know that so far this is going to play with inflation the most, and also the supply chains and also energy prices and all that stuff. So we know that inflation is a major issue across all economies, not just the US, but UK, Japan, all economies in general, even emerging and developing countries. And where's that inflation really coming from? So we know that there was a lot of quantitative easing when it came to COVID. And then we also saw that inflation was coming from the war that was going on. And a lot of central bank officials have put that into their monetary policies, that the inflation is also being affected by the war. And then we saw energy prices. And then we also saw that China had a lockdown and they were locking down a lot of their major ports, which, if anything, contributes more to that supply chain issue that we have been having for the last 2 years. And so now we're seeing that China lockdown amps up inflation scare for global markets. So second time there's a lockdown in China. Now that puts out this wave of market or this wave of sentiment across all economies, that can economies expect to see another lockdown? And in order to avoid that, what do they need to do, right? So right now, what we're starting to see is that the countries are kind of coming together and they're kind of figuring out how to live with this new COVID, how to live with all these issues are, are consequences of that. And now we're starting to see the sentiment of, well, do we need to worry about another lockdown? And what do we do in order to prepare for it? So this China lockdown is, if anything, amping up more inflation. And what we're seeing is, instead of economic and global growth, we're starting to see some sort of stagflation. Nothing is really getting better as inflation continues to increase. And then we have Bank of England may hold off on UK bond sales given poor market liquidity. So we know that the US and UK are some of the major central banks who have been talking about increasing their interest rates. And right now the UK is sitting at 0.75%. And they were talking about, increasing their interest rates to about 1%. But when the last time Bank of England increased their interest rates to 0.75%, we already know that the markets did not really react well to it. So this paired with, the nuclear war news that came out, we start to see how GJ moved heavily, which we will get into on the technical side. But one thing to kind of understand as we're going into the next couple of weeks, as more interest rate news come out, more sentiments being put out, is that the economy is not there to support these interest rate hikes. So this is something that we have been talking about for the past couple of weeks, that just because you increase interest rates, it does not mean that the economy is going to take it well. It does not mean that's a good thing overall. The consumer is the core of the economy. Think about, what does it do to the consumer? The UK is already having issues with living costs, right? A very high living cost. And you're also starting to see issues with inflation. You're starting to see issues with the global supply chain. You're starting to see issues with the gap between the labor market and the employees, right? So not everybody is hired, and we still have that labor market issue going on. So all in all, the economy is not there to support another interest rate hike. So right now, what we want to see going into the next couple of weeks is, can we hold on to the same interest rate at 0.75%, or are they going to decrease it back down to 0.5% or 0.25%, coming to near zero levels? Now, moving on to the economic calendar, we start off quite easy, right? We had a couple of bank holidays. And then today, not too much going on. You have the Bank of Canada governor speaking, and then you have the CPI coming out today in Asian session from Japan. So that's one thing that I would pay attention to. And then in London session, you don't really have anything else coming out. There's pretty much no data coming out in London session. Things start to pick up again in New York session, where you have the durable good orders. And what I really want to pay the most attention to here is the consumer confidence instead, right? So now, as we're getting closer to another interest rate hike, and the news that was coming out about potential, quarter basis point hike or half a basis point hike, or can we see a 75 basis point hike? So that's what we have been seeing from the Federal Reserve so far. Is like, that's the sentiment. What I want to pay attention to is, what's the consumer confidence about the economic outlook for the next couple of months, for about 6 months or the next year. And this is going to tell us a lot about what we can expect the market to do when the interest rate news does come out. So that's what I'm going to be paying the most attention to tomorrow. If you trade the Australian dollar, then you have CPI coming out. So of course, pay attention to that. If you're trading the euro, then pay attention to the consumer climate that comes out in pre-London session tomorrow. And then Wednesday, you don't have a lot of high impact or medium impact news coming out, but mostly it's a lot of low impact news to kind of give you an overall understanding of how's the economy. So pay attention to, again, when you're trading in the New York session, the goods trade balance, you have the wholesale inventories, pending home sales. So last time we did the weekly outlook, and a couple of times I think we have mentioned how important real estate overall is to the economy, because that is one of the most known wealth generation sectors of the economy. So if you start to see that things are starting to calm down in real estate, just understand that this is also an effect of higher interest rates, as a lot of investors were going in and buying up a lot of houses. I'm pretty sure you guys heard about Zillow and everything like that, and retail investors in general. going in and buying a lot of houses, a lot of people getting new construction homes, first-time homes. They were taking advantage of the low interest rates. But now as things are starting to increase, we will start to see some of these home sales kind of slowing down. So I'm not saying it's going to happen in the next month or so, but in the next couple of months, we will start to see things kind of slowing down by the end of the year. And then going into Asian session, again, pay attention to retail sales, what's going on over there. And then you have some good JPY data coming out where you have interest rates coming out, and then you want to pay attention to what's their outlook report and their monetary policy statement. And then you have the press conference coming out, which is also when there's going to be a lot of volatility. So in Wednesday's Asian session, you really want to start, preparing for that Asian session because there will be a lot of volatility, and you want to pay attention to what's happening in their outlook report and the monetary policy statement. Then going on to Thursday, in Asian session, you have the bank holiday, so that kind of calms things down for us after Wednesday. And then we have the GDP data coming out from the US, and that's another thing that you would want to pay attention to. But other than that, after about Wednesday, I do expect things to kind of slow down. And then on Friday, just to give us one last kind of volatility as PCE price index comes out. So again, this is inflation from the consumer side again, but minus the energy and food prices. And then you have consumer sentiment and inflation as we get into NFP next week. So I'm going to hand it over to Stefanos now.
Appreciate it. Yeah, we actually got a lot on the calendar this week.
Mm-hmm. A lot of low impact news, but here and there we got some good news coming out.
Absolutely. Let's start with GJ. All right, guys. Let's start with the higher time frames on GJ over here. A lot of you guys have obviously seen us break down the charts and break down the economic calendar and a lot of the fundamentals. But anybody new here, I'm just going to break down really quickly what some of these moves here on GJ were. So right over here, very quickly too, right over here, 2008 market crash, right? Mortgage crisis sent the market into a frenzy, and we all of a sudden came all the way back down to these lows of 120. Right, holding the support. You get that short-term retracement over here, and then the retest of the previous low. Then we get the economic recovery over here, starting in like 2012, 2013, really coming up all the way back up to retest this level, or actually form like a questionable valid trend line over here until it taps 3 times over here. But we ended up in this market recovery over here, which we're now in something very similar since the beginning of COVID over here. So right here, we came all the way up to around 190, 195 here on back in 2015, and then they announced Brexit. Right, so Brexit took us all the way back down to 130, holding support over here. We retrace, right, come right back down and retest the previous lows. Then we end up holding support over here before COVID in 2020. Right, so that market tank over here from Brexit never brought us back below the 2008 market crash around 120. Neither did COVID either. And you could argue COVID could have been worse for the overall economy. But looking over here at more immediate price action, I have a lot of these levels already marked off for you. But you have 149 over here marked off as the previous candle body highs over here to the left, previous resistance. Ended up holding support after reaching 156, right? We finally reached 156 after maybe about 6-7 months, pushed up into 156, reacted to the multi-year downtrend and the previous resistance, and then came right back down to 149, right? Then we came right back up with interest rate high. Well, they thought that they were going to actually increase interest rates over here back in October, pushed us down in November because they never did. We ended up holding support at 149, and then we actually had a surprise increase in December, which pushed us all the way back up to 159 again, right? We had a couple increases in rates. You had the Russian-Ukrainian attack right over here, which brought us right back down to this area, retesting this previous trend line, and then we skyrocketed from there. So we just had a previous very strong monthly candle over here with a wick to fill. This candle filled it right away, pushed all the way up to 167,500, right? Where we ended up holding a resistance as a previous support as well, right? So this was definitely an area of interest that we ended up reacting to. And now this candle ended up coming right back below 162,700, I would say, this previous resistance over here, which we'll take a look at in the lower time frames. But two strong monthly bullish candles over here, finally breaking us out of this consolidation. Can we stay above it, right? Are we going to have a healthy economy moving forward, and we're going to stay above it, continuing to recover from the previous market crash, just like we did over here? Are we going to recover the same exact way, coming back up into the 190 area, right? Or are they going to increase rates too quickly? It's going to implode the market, and then all of a sudden you're going to see some pretty bearish movement on GJ over here, because everyone's going to be investing into the yen.
One thing that I would add is also when you're looking at like the monthly and weekly time frame, realize that the massive push up that we had this month without any sort of bottom wick rejection, we tapped into some key levels, right? And so now obviously we need to see some sort of correction happening before we can head back up. But as you're tapping into higher time frame levels, that's when you see the fundamentals come in and kind of support these moves as well.
Yeah, one thing that I was saying to my group last week and this week as well, this morning, is whenever you see some of these monthly candles, look recently, right? They never really get bigger than this one right over here or this one right over here, right? So when this candle with no bottom wick just pushed up, filled that wick and pushed all the way up to this previous support over here to the left, I said, I think this is the height of where we're going for this monthly candle, simply based on the fact that this candle was around those sizes, right? Some of these candles over here, right? They never really get that much bigger than that. So that once you tap into an area like this over here to the left, you're going to get some kind of reaction. Also, timing. It's the end of the month. So you're going to get some kind of reaction over here, and you're going to form that top wick, right? It's just a question of where is this candle going to actually close? Is it going to close above this previous resistance over here, right? We got about, 6 days left? So are we going to end up closing above that level as like a strong bullish candle? Or is this candle going to close somewhere around there, no bottom wick, and a very tall top wick? Could the next candle create a top wick past the low of it and continue back down to 156?
I think,
Right.
of course, besides the fundamentals, but it also depends on the levels that you're tapping into. We just broke out of an entire year. Actually, we've just been in this consolidation on the monthly time frame, right? From 2021 until 2022, and then we finally broke out of it. So I think that's where the volatility came in, the volume came in from, to push up into that 168 level, and then start retracing from there as we're starting to see the fundamentals kind of supporting these moves. But for the other moves, the Brexit was still going on. So that was one of the major factors for the pound here, as there wasn't a lot of, progress happening with Brexit. They would come to some sort of conclusion, and then you would see this back and forth happening. And that's why we saw the market, for the most part, kind of just consolidating, but yet moving in a certain direction.
Absolutely. All right, looking at the weekly. Again, tapping into that area over here, like I was talking about to the left, you can see a little bit clearer over here. You can actually draw a big zone because you got a support right over here. So we're just kind of reacting to that whole area right there, where again, like we were pointing out in the monthly candles, where you get that weak bullish candle with a tall top wick and a very weak body. The next candle creates that top wick past the low of it. So what I was saying was, can this happen on the monthly over here? This candle closes around here. But looking at the weekly now, again, you got some nice retracement, very bullish move, right? It's you gotta wait for certain signs before you take sell. And obviously we've had some nice push action on the lower time frames over here, but are you going to completely try to call tops over here and expect price to continue all the way down here? Or do you want to wait for some levels to break? We know that we have a support right here, and we know we also have this level over here, 162,700. I marked off 714. It's these wicks over here to the left. You also have this resistance over here as well, but you get that resistance over there that price could be meeting up with to hold a higher low, a new support for price to continue to drive back up, right? So where are we going to end up pulling back into before we hold support and then continue back up? Now, if you could see here, actually, I won't draw it on the daily. I'll wait for some of the lower time frames. But we did have a trend that we were following over here. But right now, again, multiple reactions to this level. This candle ends up closing right at it. You get this candle passing it, and then flipping bearish, closing bearish. This candle fails to close above it, and then this candle creates a lower high. Yeah, lower high over here. Top wick past the low of the previous candle, and then we just continue right back down, breaking through this support over here. Looks like we're breaking through this previous support over here and that 162.714 level. We're actually just tanking right now, which is nice. So where's that next level that we could be coming into? I'm looking at this one right here.
That was like one of my favorite setups to trade on the daily time frame. Perfect break and retest. That's also why I mark off the levels right at the candle closes. So then it'll tell you, like, as soon as this candle flips bearish, where are we headed? Or as soon as it flips bullish, then where are we headed? And I think that was a perfect way to catch some of these trades.
Which move were you talking about?
This entire sell-off that happened, it happened since like the beginning of the week or even last week, and then pushing back down. So like this one here, for example, one of the levels that I would mark off is finally, like, clearly as price is pushing down here, I want to see if price is going to be able to break below, this zone and continue pushing below it. So let's say this 30-minute candle, as the Tokyo Stock Exchange has just opened up, I want to see the 30-minute candle close here. And then as it breaks this daily low, then that's pretty much your quick scalp opportunity to potentially come down somewhere here or even target some of these lows.
Yeah, I was looking at this rectangle that you have right here.
Mm-hmm.
Yeah, definitely, like anywhere in this area we could actually end up reacting to if we end up holding a support in here to continue up. But if we break through that, right, which it looks like we're actually going to, I could see that move that Sharma was just saying. We wait for that retest, and then you continue right back through.
Yep.
Back down to this support as well. But you do have this level that you need to be aware of, which we'll look at in the lower time frames. All right, looking at the 4 hour looks beautiful, right?
Mm-hmm.
We've seen this many times. You get this resistance holding, right? Price has just been pushing down as well. But we could draw a trend line over here. There you go. So you ended up getting a strong bearish push down. You get a low formed, strong bearish candle close as well. Get this bullish candle close. This candle grabs liquidity, flips bearish, and it looks like it's going to end up closing bearish like this. Could the next candle end up creating a top wick somewhere around here and then continue right back down to 161,500, somewhere in this area? You got a support right over here. I could definitely see price coming down into. But let's see what we look like in the lower time frames. Another was just a good move. Yeah, look at that. Beautiful.
Nice low rejection, and then as price is pushing down, I would say at least on the 15 or 30-minute time frame, since the Tokyo Stock Exchange just opened up, wait for a break and retest, and then look for your entry.
Yeah, see, this is a perfect setup that I would have been taking. I was actually at the gym at the time, but I would have taken this after this candle closed. Because you get this low formed, price keeps forming lower lows, right? Keeps pushing down. Even with this retracement over here, we still close below this level. We fail to break above it, right? And then we just continue down. This was a nice move this morning, coming all the way down, right? Create this low. We come up, retest it, fail to break this area once again. Strong bearish close on the 1 hour, right? With a wick to fill. Get enter as soon as that candle closes. And you could bet we're coming right back down. There's nothing stopping it from coming down to this support. And I could definitely see us coming back down to 161,650.
Yep. And that's how you know that that's a liquidity area, when price has to keep revisiting that area to grab some volume.
Yeah.
But let's go ahead and move on to gold.
All right. Looking at gold over here, I have some of these levels marked off. We won't go through the history right now. I'll give you a quick breakdown. But you got 1680 as a nice support that was held during COVID as well. Price bounced off of it, created all-time highs up here. But 1680, 1750, holding that support where prices reacted to multiple times over here and held support between 1650 and 1830, which I have marked off right over here as well. We finally broke out of 1830 after failing to break above it multiple times, rejecting multiple times. This candle finally broke above, sitting right up here at 1910. Now you can mark off 1900 if you want, but I like 1910 once you look at the lower time frames. You'll see what I'm talking about. But we had the invasion of Ukraine over here in March, which pushed actually the end of February, pushed us all the way up, filled that wick, pushed us all the way up to historical highs around 2075, right? But again, we got a very similar close where it looks like we're going to get the same close as we are on GJ. This is that move that I'm talking about that you could possibly be getting on GJ. We get the weak bullish close with a tall top wick, weak body. This candle jumps up, creates its top wick, wanted to test 2000 once more, and then retrace, flipping bearish, and now possibly breaking the low of the previous candle over here.
This is interesting because that 1900 area, we know that that's a liquidity area, and we're sitting around like 1903. So as soon as price breaks below 1900, then you're going to be breaking the previous monthly low. It's the same concept as any other time frame, as any other trade that you would be looking for. After you break that low, where are you headed back, right? And that's where that 1830 level comes in.
Absolutely. Yeah, I mean, I could very well see us retesting that if we get some less fear in the market. Okay, so now 1910, you guys can see it a little bit clearer. Get that support with these wicks, resistance, and a nice support over here where we ended up rejecting 2000, coming right back down to 1910, holding support. This candle held support right here. Looked like we were going to continue up. This candle was going to create a bottom wick, flip bullish, past the high. That candle continue up, but it ended up pushing down, continuing down, passing the low of the previous candle here, but it ended up rejecting 1910 once again. Also 1900 if you want to mark that off. But this candle held support, bottom wick formed, past the high, continued up to the candle body highs that we previously just made on that weekly. Right. So we finally retested that, failed to continue bullish and fill this wick, ended up tapping into 2000, flipping bearish and closing a very strong bearish candle right here. Right. So now this candle already created its top wick, broke its low, right? How much farther are we going to continue down below this level over here? Are we going to actually close below in the week, right? The week just started. We already created a top wick and pushed all the way down. Could we start to consolidate in here or continue down and mirror some of these moves to the left? You get some clear candles or clean candles here to the left that you could be mirroring. Looking at the daily now, daily actually broke that level, right? I remember price consolidating in this area before, the Russia-Ukraine stuff really took off. But we have this support, and you have these wicks over here that look like they want to be filled if we stay below 1910, right? Strong bearish candle close below, right? It's definitely not weak. Is this candle with no bottom wick, the new daily candle, going to create a top wick up here, flip bearish and continue down, or form a classic break and retest over here to then finally retest the low over here and continue back down into the support, right? Or are we going to close back above 1910, back in this level around like 1917, somewhere around here, and then you could continue price breaking above, continuing up over here back into this range.
Another thing while you're dropping down to the next time frame is the way that I kind of determine whether I'm looking for a retracement trade or like a break and retest or an impulse trade is by looking at the volume. So if the daily, weekly, and the 4 hour is showing me that there's been a massive sell-off since, like, let's say, what was that support area? Like 1920 is a support area, right? So after that, we've seen a massive sell-off. That's the last time that we saw any sort of like retracement happening here. For example, on the 4 hour time frame, right? The only retracement that we saw was this break and retest. So that's what kind of gives me that confirmation that I would need to first see some sort of retracement, let's say like 1920 or 1910 being held on as a resistance, and then look for a sell-off. Pretty much what we saw on GJ, I believe it was the hourly or the 4 hour time frame that we're looking at, where there was a retracement, price held onto it as resistance and then sold off from there. So that's what I would want to be looking for here as well.
Absolutely. Yeah, no, I like, and this is something I was pointing out the other day too. This area right over here that we're holding support at is a previous rejection area multiple times. Every time we broke 1910 and continued back down into this range over here, we tapped into this level and just shot back up, right? Heavy buyer volume coming in from this area over here. So are we going to bounce off this area just like we did over here and continue back above 1910? Or are we going to finally hold this as a resistance, a strong resistance, to continue back down and retest the low over here. Looking at the 1 hour, 1 hour so far is breaking the previous resistance. I'm sure I'm going to end up adjusting this as we go down, but we're now breaking and creating higher lows and higher highs. So are we going to continue up, get some clean volume over here to the left? So if you want to catch this move back up to 1910, wait for this little retest right here. Yeah, look at the 30-minute. Wait for us to hold support in this area right here. You may get some later volume during Asian, and then you could take this thing right back up to 1910. Right, short-lived buys, unless turns into the price action that we have to the left, where you get some heavy buyer volume coming from that area, and you capitalize on a move like this. Right, price continuing up, but we need some further fear. But with that being said, I think that is good. Give you guys some good ideas.
Yeah, and anytime price is breaking out of consolidation, make sure you're waiting for that candle to close, and then you look for some sort of a retest prior to an entry. But I think, we have pretty good levels marked off for the week. And of course, we're going to be doing like our midweek check-in with you guys with the Wednesday lives that we do. Yep. But other than that, make sure, guys, you are trading safe. So we do have, good fundamentals coming out, good macro fundamentals coming out. Last week was a little slow, but I think things are going to start picking up this week. We have the economic data and we have the fundamentals to support it. So kind of just be patient with the trades. And then if anything, I would work this week, I would kind of work on, when do I figure out to take a break and retest trade or impulse trades? Like that's something I would be focusing on. And then discipline aspect too, right? Making sure you're not getting too greedy, because we are going to see good moves. But again, you don't want to be too greedy or anything like that, and work on your risk management.
Yeah, when it comes to risk management, guys, just keep studying all the ways that you could cut your losses down shorter, right? How do I lose less with these trades? That's going to turn a massive corner for you guys, not only with like obviously losing less, but your confidence as well. Because then you start believing in yourself when you can do that. So I got a lot of guys in my group that are like turning the corner with that, which is amazing. But you just got to stay persistent with it. You got to stay consistent with how you are in the market, because you can easily be great for a month and then all of a sudden, you slip up one day and you blow a lot of the profits from that month. So discipline is number one. Always look at it that way. And you guys are going to be pretty good. And also skill set over money. Make sure that your skill set is the first thing that you're focused on instead of trying to make the money.
100%. A lot of my people have learned that now, and now like they're in that phase of seeing the account growth and being able to try out the different styles, which is great. But yeah, so guys, just focus on taking good trades, be okay with no trades, no trade days and things like that. But other than that, we will see you guys on Wednesday. If you guys have any questions, feel free to reach out to either of us on Instagram. So for Stefanos, it's StefanosFX28. For me, it's at SharmaFX, the same thing as the YouTube channel. All right, talk to you guys soon. See you guys on Wednesday.
Have a great day. Wow.